Robert Kaplan making those hawkish comments to our next guest, Evercore ISI Chairman Krishna Guha. He sees a 25 basis point hike in the cards, as does the market. Krishna, the bigger question, though, is what is the signal about what comes next? What do you think?
Yeah, so you're right. I am expecting a 25 basis point rate increase today. I'm not sure I would hike if it was up to me. I would be more in the Kaplan-Rosengren camp here, turn over a few more cards, and then you can always hike a bit later in the year. But it does look like they want to hike. They've seen hot data. The inflation rate, including on those core services, remains hot. ECI wages came in firmer in the first quarter than in the fourth quarter. And I think they worry that they could lose credibility if it looks like they're stopped out in May because of bank stress and could be stopped out in June because of the debt ceiling. So it goes to the signal. I think it'll blend two components, a tightening bias that they think they might need to do more, but a period of assessment where they will assess whether they are or are not sufficiently restrictive already, having done that last hike today. So it's a kind of data dependence, but a new kind. The data now has to come in hotter than they are expecting in order for them to do more. So not, I think, a formal pause, but something that's a little pausey.
On the credibility question, as Steve and I were just talking about it, I get it. They don't want to lose credibility on inflation. They've done a lot on that front to fight inflation. Wouldn't it be a credibility problem, maybe even worse, if they poured fuel on the fire of a banking crisis?
So again, I personally have quite a lot of sympathy for that view. I think if it was down to me, I would skip May and just say that I'd expect a hike again in June or July if the data stays strong. But it is, in all fairness, the fact is that inflation is still on a core PCE basis running in the mid fours, underlying inflation by their estimates in the low fours, ECI wages in the high fours. These aren't numbers that are consistent or close to consistent with their 2% inflation target. The big question, of course, is whether all that strength is in the rearview mirror. And looking forward, as I suspect, credit tightening, lagged monetary tightening, and other factors will mean the economy cools off quite a bit over the quarters ahead.
Krishna, it's Dom. Speaking of that forward-looking data, the softer sentiment economic data, we're already seeing anecdotal signs that the banking situation right now is having ripple effects. We're seeing lending standards tightening. We're seeing fewer loans out there for commercial and industrial uses, that sort of thing. Is there any timeline in your mind for how long we could see some of these stresses play out in the broader economy? And if so, when would be the next time you could see any kind of an action on rates? Is it the end of this year or maybe even in the next?
Yeah, so I think we want to distinguish between two, of course, related strands of what's going on with respect to the banks. The first is the stress, the turmoil, the risk possibly of further failures. The second is the credit tightening that you're going to get even if there aren't any more failures, because for every failed bank, there's 100 out there who are going to be behaving more conservatively to try to make sure that they don't end up joining the list of failed banks. Now, with respect to the turmoil, the stress part, yesterday was troubling. The delayed response to First Republic, seizure and sale, spilling over with the sell-off in a number of the regional bank stocks, a reminder that the turmoil phase may not be reliably over. But in any event, I think we've already seen enough to expect that there will be credit tightening. It'll probably emerge relatively gradually over the next several months. And it may be 3 to 6 months before we have a really good read as to how much of that credit tightening we're going to get. But I'll take the over rather than the under relative to consensus on this.